It's time now for our 360 round. For that, let's bring in our panel to discuss Palantir's latest earnings. Joining us, Joe Castiglie, the portfolio manager at the Free Markets ETF, and Shay, Boloor, the chief market strategist at Futurum. Shay, we'll start with you. Thoughts on the report?
I mean, looking at the price action down 8%, you would assume that the earnings weren't great, but they're actually very impressive. Maybe the market just got ahead of itself, but long term, nothing has changed. We at Futurum believe that every week we get stories from Google, Microsoft, Meta, all the hyperscalers that they're building these new compute factories that essentially connects directly to why Palantir can post video game like numbers like they did yesterday. So those trillions of dollars are going to be continuing to be spent on AI infrastructure, on CapEx, that are going to be creating this new raw capacity. That capacity alone doesn't really generate the productivity that all these enterprises need. And that's exactly where Palantir sits. So although it's down, I'm looking at it 8% right now. I just think the market ran up a little too aggressively on the stock entering the print, and now it's just digesting a bit.
All right. And Joe, coming over to you, we saw Palantir blow through expectations. They raised their guidance, but we are seeing it down. I'd love to just get some of your key takeaways as well. But also, are we seeing a sell the news scenario here, or do we think investors are finally pushing back on some of these valuations?
I think you're definitely seeing a sell the news scenario here, right? This was an absolute blowout quarter. The company had a 40% net margin in GAAP terms. Just an absolutely staggering quarter in terms of the numbers, but the run up into the earnings announcement, the stock had been up tremendously ahead of the announcement, putting in a high, around 207 yesterday. So I think you see some of this. It's probably some profit taking. There's definitely some positioning within the market where some people are going to scale back a little bit. I don't know if that's indicative of, is the growth scenario still in question? I agree that there's so much spend happening in this AI and data center space, and Palantir is uniquely positioned to continue to benefit from that because they create that operational leverage for people, for their customers. So.
And Shay, you called these video game numbers. We're looking at revenue up 63%. Their margins are expanding. They had really strong guidance. It's accelerating. What makes this kind of performance so rare, and is it sustainable?
I mean, just going off the Rule of 40 score of 114, that's almost triple the terminal goal for a lot of CEOs. So I think that the commercial business of theirs is what's kind of fueling the engine right now and why they're just growing top line at 60% plus rate with 50% operating margins. When you talk about their commercial revenue for just the last quarter alone, it's growing at 121% year over year, 30% sequentially. And this is off of a $400 million revenue base just the last 3 months with only around 500 customers. So that is an insane ratio when you think about for enterprise software, because a lot of SaaS firms that have that kind of revenue scale, it's based on thousands of clients. Palantir is doing it with a couple hundred. So that tells us that the runway is massive, that Palantir's customers are spending more and more, and you can see that with the 134% retention rate as well. But also, they're becoming so embedded into these operations that the stickiness is something we've never seen before. So as AI matures, their breadth is going to widen, and that's why we do believe that Palantir is probably going to hit $1 trillion valuation before this end of the cycle.
And Joe, Shay just said that the commercial business is now the growth engine for Palantir. I'd love to get your thoughts on what you think is driving that acceleration. Is it just purely AIP adoption, or is something more broad happening in enterprise?
Sure. So I think when you look at it, right, there was tremendous AIP adoption in the last quarter, right? But I think it goes beyond that. The stickiness that we're talking about, right? That's being driven by the FDE, the forward deployed engineers, right? Who are helping these companies deploy and scale these software products faster. And it's then more accretive to clients in a quicker way, which is actually benefiting both Palantir and the end client itself. I think another area that Palantir has some unique tailwinds is in the deregulation of certain specific industries that they work with, right? So you think about energy and infrastructure, which everyone's talking about in terms of the AI and the need for stable, reliable energy. If you have streamlined permitting and that gives some budget flexibility back to these companies, they could start to deploy capital investing in this type of software to optimize their data throughout the organization. I also think banks are another area where you could see that if you start to see, capital levels lowered, and that becomes less burdensome on the banks, and then they can deploy more capital into these more growth-oriented operational AI platforms, which is exactly where Palantir excels.
And Shay, last question coming to you. If you're an investor watching Palantir's performance post these strong earnings, are we in a buy the dip scenario here, or are we waiting for the market to digest the hype before we jump in?
I think we have to wait until the valuation gravity kind of levels out a bit more. I think some concerning cracks I noticed yesterday was that the commercial revenue is kind of, the scale is breadthening within their initial customer base. I think the net new customers were around 50 in Q3, where Q2 was 70. So there is somewhat of a new logo decelerating. That's modest, but it's still decelerating. So it's raising mild concern that if the AIP flywheel can scale breadth as fast as the depth within their own existing customer base. And also, we need to see some more traction on the international side of their business. I think that international grew around 30%, US grew around 77%. So that widening gap limits the narrative that Palantir can scale globally at the same velocity. So I think that at a $500 billion market cap trading at over 100 times sale, the bar isn't just great, it's flawless acceleration. And right now, there is some levers that need to be pulled to get that next leg up.
Yeah, certainly. Shares are still 7% under pressure on the heels of those impressive numbers, likely tied to their really stretched valuations right now. Want to thank you both for being with us. Joe Castiglie from the Free Markets ETF and Shay Boloor from Futurum for helping us break down Palantir's earnings.